You may recognize our good friends from Paradigm Shift Financial. That is Thomas Blottenberger and Shauna Price.
Hi.
They are here and back again, and I brought a special friend with them today.
Special friend.
Special friend.
Corryne, can we give out your last name?
Yes.
Corryne, I know we're going to muffle your voice and things like that with the things you're going to share today, but no, he says Kivett?
Yes, Kivett.
Okay, so Corryne Kivett is here, and you have come from, you worked for what we will call a big box brokerage.
Yes.
Can we say that?
Yes.
And you're here today to kind of tell us a little bit of behind the scenes of kind of what goes on there. Just for a little background for you and for people who maybe haven't seen Thomas and Shauna on the show before, a very different way of going about the educational process of teaching people how to think about money, how to save money, how to invest money specifically, how to stay in the market, how to do it in a way that is academic to the extent that you're looking at the facts, the realities.
And facts don't care about feelings.
Yes.
So that's important.
And neither does Thomas.
Valid statement.
It's the perfect strategy for you to teach.
That's funny because we do talk about feelings a lot.
Well, your emotions and your feelings are important when it comes to investing. No question about it. You have to be able to be honest with yourself. Right? I mean, that's super important. Like, you need to know, like, are you a gambler?
Yeah. And if you are, bye, Felicia.
Well, especially in the last couple of weeks when the market's turned a little bit down. There's been some panic.
Yeah, the flash, so I was gone for a week. There's a flash crash, basically, right? Like, what did we lose, 800 points in the Dow in 2 days or something like that?
Yeah, it's not bad.
Yeah, so, like, what happened? Was it buying opportunity? I don't know. Then, like, I looked one day and it was, like, almost 600 points up, I think, the next day.
Yeah.
After that, so.
I had we had a client shoot us a message that was like, the strategies that we use have global diversification, and international is down more than the U.S. In fact, U.S. is up in certain areas, right, versus international. And she goes, well, when are we going to move away from international? And I said, well, so just to confirm, what you want us to do is you want us to sell the thing that's low and buy the thing that's high, at an all-time high in certain instances. That's you want that? Oh, well, no. Never mind. Okay. We won't do that then.
I was going to say, like, did you guys notice that when that happened that people panicked? Did anyone panic and call you and go, hey, the sky's falling, get me out?
Yep.
Oh, yeah.
Well, not a get me out, but
we need to do something.
Yeah.
Right. No one's curious about what's happening until the accounts start to go down. Could you explain to me how come, like, how is Finland doing so well that we're invested in them right now? I really want to know. I'm enjoying that return in my portfolio. No one does that. No one does that.
They never call to give kudos. Is that what you're saying?
No.
Exactly.
No.
It's just to call, like, and I was honestly a little bit shocked by that too. But we know now there was a flash crash in February. We kind of know now that most of the markets are being moved mechanically or by programs, computers, or trading. Like, it's so. You can have these things where the computer just goes, I don't know what to do, bah! You know, and the things start happening, and you lose 500 points in the Dow in one day, and it makes no sense because you broke the 200-day moving average or whatever it is.
It's like if I played chess against a supercomputer that understood how to play chess, it wouldn't know what I was doing because it wouldn't make sense to chess players. It's not any strategy at all.
When you pick up the pieces and throw it at the computer, it wouldn't know what to do. Like, I use my rook, bah!
Yeah.
It'd be like, this is why Skynet exists.
Does Skynet exist?
By the way, this was welcome to our segment.
Nice.
This is what happens.
It's awesome. I love it.
It's a very loose conversation.
Yeah, I love it.
But we do want to talk to you today about. So, like, tell us something, because, you know, Thomas and Shauna have been telling us about the way that they help people understand money, manage their emotions, you know, manage their investments, structure it so that, you know, you're set up for success. As long as you don't deviate from the plan, every academic possibility has been accounted for. Risk versus reward, all these things. Things that I think a lot of people, they hear and it sounds good. In practice, it may be more difficult. I think they've taken a more difficult path than a lot of people in the industry do, because they have taken the time to try to educate and not just be order takers or just oh, okay, hey, you want us to move the money from here to there? Okay, we'll do that for you. Is that what you want? All right, great. It's your money. To take the time to be like, wait a minute, are you sure you want to sell what's low and buy what's high? Are you sure about that? What was your experience? We won't name the organization you were with at one of the bigger brokerages. What was the thing that sticks out to you the most that's different between maybe what they do and what you and Shauna and Thomas do?
Yeah. Well, what these guys are doing, you guys are teaching people habits, how to change their habits and how to think about their money, how to consciously make changes and save and plan for their future. Whereas where I was working, it was very performance-based, very, this is what we're doing, this is why, and that's it. No really questions asked, no teaching, no concept of what am I saving for, why am I saving, what is return, so all these questions that people don't even really know that they have because it's not even addressed. You guys are really changing the perspective of what financial advisors are doing and teaching people rather than just talking at them, making it a discussion and really informing them of what goes behind the money aspect and why they're invested in what they're invested in.
And those are all super important things.
Yes.
Let's go to the client meeting. Let's say the initial consult. Like, what was your initial? What were you trained? Like, hey, what's our initial meeting? What does that consist of?
At first, it's always about the markets, like what's going on with the markets, why the markets are doing what they're doing, the economics behind it, which is all good. And then it would go into the client's performance, what they're invested in, how the performance has been, how it's expected to do, and then what their goals are, maybe what their goals are. It would depend on maybe, yeah, what their goals are. Kind of depends on the advisor.
You wouldn't ask them about, or you weren't taught to ask the client about their goals.
I was taught to ask them, yes, but I've seen meetings where it just depends on the meeting.
Yeah, how it's flowing. Right. Yeah.
So sometimes talking about goals, sometimes not, and then just kind of wrapping up with your portfolio's either doing great or not doing great, and why. But typically, you always end with a happy note. So if it's not going good, there's always a positive to it.
Which is that we can help.
Yeah.
What was the goal? When you said it was very sales oriented, meaning when we talk about sales, you're talking about getting assets.
Yes.
And that's how you were evaluated.
Yes.
That's your performance as an employee for the organization was based on how much of that you were able to accumulate.
Yes.
Not necessarily how well it was doing for the clients.
No.
Did that have any bearing at all?
For me, that it did, yes, and that was a big reason why big corporations didn't resonate with me. The fact that I would need to get clients or else there's some sort of consequence, not necessarily on how I'm doing with the clients that I already have, but continuously getting clients just to get clients. For me, I'm not okay with that.
Were you ever, taught or expected to explain to clients why you were telling them to get into certain investments, or were people just telling you, hey, this is what you need to put people into?
No, there was definitely some knowledge. The advisors that I worked for, I'm very grateful for the ones that I worked for. They were very knowledge-based, so they did explain why they'd be investing in clients and what they would be investing in. But I do know advisors that just because they say invest in this, they put clients in this without even one talking to them or telling them that they're shifting them out of their portfolio. So, and it's kind of the nature of the beast with that.
Well, a lot of times, even the conversation about education, though, in the other model, is like, here's what the market's doing, as if we somehow have some clout to know what that really means for a portfolio going forward. I mean, does what the market's doing today really have bearing on, like, is it fluff to tell a client that, or is there actual bearing on how that structures the portfolio? And then the question there is, like, if that has bearing on how it structures the portfolio, if the market changes tomorrow, does the portfolio change tomorrow? And then wouldn't that be market timing, right? And so there is something to be said about it is important to be educated, and that not all education is equal in the sense of just because I'm telling you or you're telling someone or any of us are like, this is what's going on, doesn't mean that that has any academic bearing on the future performance of the strategy, right? Because correct me if I'm wrong, but a lot of times that happens where I mean that's what we had to do before was we'd put someone in something, And then the market would have some kind of shift that we didn't expect, and we're like, okay, now we got to shift up what we just did.
Yes. Yeah, happens all the time.
Gotcha.
Were you, what would you say was the priority for the organization?
The priority.
Yeah, what was the organizational priority?
Deep question.
Well, I mean, I think that the macro priority of an organization that is an investment firm is really important for people to understand what that is. Like, for example, we know with Thomasson China's model, theirs is training people to learn. How does this stuff work? How do I think? What's wrong with the way that I think? What is right about the way that you invest correctly?
And taking their power back, of course.
Correct. Yes, and the whole concept being that you can learn this stuff. We're going to teach you how to do it. You need to be coachable, so that there's a very specific sort of direction. Like that's the priority. That's the focus. That's the goal. I'm just curious at the big brokerage, what do you feel like the goal was?
Definitely was not teaching and educating. That's for sure. What was the main goal?
Yeah.
I know that deep down that the client's interest is best at heart, but I didn't feel that when I was in the company that I was working for.
What did you feel?
Like it was more of sales and more for profits and performance.
So it's about profit.
Yeah,
Maximize shareholder wealth.
unfortunately.
And this was a publicly traded company?
Mm-hmm.
And there you have it. And it's hard to get around that, isn't it?
Yeah.
Mm-hmm.
Once you are a publicly traded organization, it is very difficult to get around the idea that profit somehow comes in any place but first.
Right.
Yeah.
Mm-hmm.
In the pecking order.
Yep.
It's a difficult sell if you're the CEO of a publicly traded company to say, we're here to do anything but make as much money as possible. Because that's why I'm here.
Yeah, capitalism's a great model, and it's not bereft of morality issues. And so you get into capitalism and you look at the good things of capitalism and the wealth that gets created and how a company can grow to the size of some of these companies through issuing shares of stock and having that. But then you look at how a lot of times companies' models shift from a client service, quality perspective to a greed-based profit margin perspective. And it's almost a natural shift. I mean, look at Google, right? What was their initial slogan? Do no evil. And then now it's do the right thing or whatever it is. And I don't know necessarily if, combating with or getting together with China to restrict access, but to make more profits is doing the right thing. It's just interesting how that kind of shifts over time. So that capitalism has wonderful aspects to it, and that what you're sharing, I think, is one of the negative pieces of it, which ends up being the greed that a lot of larger companies just naturally shift towards.
What's great, though, is that people have options. So when you talk about specifically on the capitalism front, people always have options. And once an organization or a service provider is out of bounds with the value they're providing versus what they're charging, people can make a decision easily to go somewhere else, have options. So, and that's obviously the decision that you made as, a professional. You said, you know what, this isn't for me. When did you know? Was there a moment? Was there something you saw? Was there things that happened, or were there things that were happening all the time? Like, when did you know, all right, this is not the right model for me. I've got to move on from this?
Well, I knew pretty early on, but I didn't listen to my gut, even though it was telling me to move on. I would say, because I was working at a smaller firm, and then I started at a bigger corporation, and once I passed my licensing exams, and even while I was studying for them, I just noticed that it was going to be more about performance and less about actually teaching the clients how to invest properly and about their money. I'd say pretty early on. I mean, I was only with the firm that I was with for, I don't even think a year, almost a year.
Almost a year.
So it was pretty early on.
So very quickly, you were like, okay, this isn't right. And I've heard that before, of people who've gone that direction and can very quickly go, okay,
It's
not right.
for me.
Not right. Because you probably were able to see, wow, there's a lot of money to be made here.
There's a lot of money to be made.
There's a lot of money to be made
There's a lot of
here.
money to be made.
And one of the reasons where we enjoy Corryne so much is she has such a good heart, as a person.
Oh, thank you.
Well, no, it's true. I mean, just in our conversations before you even left, you know, like you were always trying to do the right thing. And I think a lot of times, I mean, at least that's how it was for Shauna and I, is like, you're in something and you notice a problem, and you feel like that there's an issue there,
There's some
and
strife, you know.
but there's a part of
Just
you
can't
that's
get comfortable.
Yeah.
and there's that part of you that's like, well, maybe we can shift it from within. Like maybe the way that we interact with clients is going to improve the model because we'll have that best intention and we'll be the outlier of this model. And it's really hard to maintain that long term in the model. You either have to break out or do something else, or a lot of times you get consumed.
Well, even when you're in the model, you're not quite sure what the other alternative is. Like you feel
Yeah.
uncomfortable and you know that you're not doing the best for the client, but you're not quite sure what the other alternative is. And for most people that are working for big box firms, they don't even know what the other options are. So that's why they stay, and that's why they continue to sales, because they're just unaware of what else is out there.
It's like it's like unplugging from the matrix,
Yeah.
really. Like we went to an event and it was just like, whoa, this is the real world.
Yeah, it is.
Well, it's not easy actually teaching somebody how to behave with their money.
Very hard, actually.
You're taking the hard road. Like it's extremely difficult to try and get somebody to change their behaviors around their money, or even sit down and think about what's actually going on.
Or
with
acknowledge
their
that
habits.
their
Acknowledge
behaviors.
it. Yeah.
Yeah.
Yeah,
Most of us are on
it's-
autopilot.
Yeah.
We don't think about how we think. Weird.
But it's
That was
definitely
deep,
the
right?
most.
That's deep.
There's no power in telling someone
Take that
what
to the
do,
bank,
though.
whatever camera.
Yeah. It's like they have to experience it for themselves.
Well, it's difficult to teach self-awareness on any level.
Yeah.
You know, much less on a financial level. You know, I beat my head into the wall for years on the credit side of this conversation, trying to teach people how credit scoring works and how not to screw that up, or how to fix it if you did. And it's very difficult because, again, it's behavioral. It's actually similar to this. You know, someone who has bad credit habits, it's very hard to break those. It's really tough to say, well, you have to do things a little bit differently. And you shouldn't pay on the 29th day of the month every month. It's not a good idea, you know. It's going to break at some point, you know. So
I too like to live dangerously.
that has to be. There's some meme about that. Like, I can't
Austin
remember.
Powers.
Is that what it is?
Yeah.
So it's like when you go that route, the educational route, right? Which is the route you're going now, right?
Wait, me?
Yeah.
No.
No.
Yeah, it is, just in a different aspect.
Oh, in a different
Yeah.
aspect.
The educational route, the route of of teaching,
Yes.
essentially.
Yes.
Instead of selling product, right? That's the shift that we're talking about here. And think about how much better off the average investor would be if that were the status quo, instead of, I mean, these guys are like renegades, right? Like in this industry.
I love that song.
Yeah.
by the way. It's a great song with Stick. Renegade and had it made. I'm sorry.
should be
It's,
like your theme
it's
song.
the afternoon. What do you want from me?
This is great. So when it comes to this, so now that you're operating outside of this, let's call it Wall Street world, what things are you seeing that are now possibilities, or the things that you're going to be able to do now as a result of that?
There's a lot. I mean, the world is wide open, and the fact that I'm going into the wellness industry, and the fact that I can just be more present with people, I feel a lot of that. Whereas before, I felt like I had to constantly be performing, or I was on some metric, some scale that I was going to be weighed at. And now it's really being present with people and listening to them and providing a service for them.
So when you're talking about those metrics and and the pressure that's involved there, I think where people's interests are is really, really important into understanding how they are influencing behaviors. Do you believe that the pressure that was put on you and other people who had your job is influencing the way that they were coaching people, or what they were telling people to do, or influencing people to do? Do you think that would cause them to do things or say things or influence people in ways that they wouldn't have otherwise?
I mean, yes and no. It kind of depends on the person, but yeah, if you're under such pressures to perform a certain way, you're going to act in ways that you meet that performance metric. If you have to hit a certain sales quota or else you don't get paid or you get a pay cut, people are going to act in ways that get them to that pay quota, which is unfortunate, but
that's how it works.
That's kind of, yeah.
We've talked about this before. We really believe that in most instances, commission-based business, when there's commission-based business, that in most instances that creates a initial conflict of interest. That the exception to the rule is people who rise above that to do what's in the client's best interest. I mean, I can speak perfectly honestly for myself. I mean, I always tried to do what was in the best interest, and yet when we left the model, I could see how the commission aspect had crept into some of the things that I thought was the best thing, like how it started to taint what I even considered to be the best for clients. And I wasn't able to see it until removed myself from it and be like, oh man. And there's a few of those clients that we actually had to go back. That was a fun conversation. Yeah. Had to go back and be like, hey, there were things that we had you do that now looking at it and looking at what happened, they're actually not what was best. And here's why. And sorry. Yeah. Here's what we would recommend going forward. You can do it with us, you can do it with someone else. But this is the new thing that we think, based on all the last 2 years of learning that we've done, that would be of more appropriate benefit. And man, that's a hard conversation to have. But we didn't, I mean, the whole time we were trying to do what was best, trying to do what was best. Didn't see how the commission piece of it tainted that.
Well, when you're in an industry like that and you're in an environment, you have to believe or convince yourself to believe that you're doing what is best. Because how do you operate in a space like that, feeling out of integrity and like you have no morals and like you're just a shit person, if you're doing that every single day?
I like it.
You know what I mean? Like, you have to convince yourself that that's what's right for the client, or there's no other way to survive like that.
We always say around here, compensation drives behavior. Conflicts of interest exists in a lot of places. It's the whole, Warren Buffett said, I think, never ask a barber if you need a haircut, right?
Or a dentist if you need a root canal.
Right?
I have a real story on that one.
Yeah, they'll root canal you up real quick, won't they? Every time I go to the dentist, they suggest a $4,000 surgery. It's just like, every time. It's like, really? Do I need to do all that?
Now, your teeth are nice, but they're not as good as, like, our implant teeth. You don't have to brush those things. You want to trade them out?
Never brush your teeth again. Just mouthwash for the rest of your life. It's freaking amazing. But titanium teeth.
But you can see that, you can really see, and that's why we're so passionate about it, and I think that's what Corryne sees in the conversations we've had. You can really see how education and knowledge, and at least having some level of learning, puts the client in a position to completely combat that. Like, if you know some level of what's going on, you can have a conversation now with someone that's a professional in any industry, and be able to have a little bit more clarity on, is this person just taking me for a ride, or is this actually coming from a place of quality? And what happens for most people that get taken is that they had no clue how to metric it. So they had no clue of how to even look at what the person was saying, but like how to measure that. It was only, do I like what the person's saying? Does the person seem like they're trustworthy? Are they charismatic? We were actually just talking about that the other day. It's interesting how often people have trust issues that then work with people that take them for a ride, but then distrust the people that are being honest and telling them what's up front.
Yeah.
And a lot of people are probably thinking, you can just go on Google and figure out whether this person is going to take me for a ride or not. But when you go to search for something on Google, we always talk about this, the confirmation bias. You're looking for to confirm what you're thinking in your head. So you're looking for the articles and you're looking to confirm that what you're thinking is the correct thing. And how do you get out of that mindset? And once you realize that you're doing it, you can see things from an objective view.
This is some deep shit.
Yeah, it is. It is true.
That's very deep.
It's true. It's very difficult to teach, but that's what you're helping people. What you're trying to teach is like, and you have done a tremendous amount of academic research to support what you're saying,
Yep.
which I think is really, really important for people to ask those questions. Like, what academic research do you have that supports this strategy? I would challenge every single person who has an advisor right now, has an investment plan, to ask that one question of their advisor.
Yeah.
What academic research supports the strategy that we're using?
And can you point the other really good follow-up to that? Because there's a lot of people who can pay lip service to it. The other good follow-up to that is, can you demonstrate how it's actually working in my portfolio? We had a lady that we were chatting with, and she said that her advisor said similar things to what we said. You can't time the market, you can't do these things. But we looked at the underlying funds that were in the portfolio and found out that one of them had almost an 80% turnover ratio. And for those who don't know, a turnover ratio is I have this basket of stuff beginning of the year. At the end of the year, I have 80% different stuff.
I went and bought a whole new wardrobe. What happened?
Right.
Somebody needed to get some money for the wardrobe.
80%.
So,
A whole new wardrobe.
So it's like, even in that
that's what
case,
happened.
Closet.
And the old stuff was not donated to Goodwill. Okay?
You just set it on fire. It's your money on fire in the closet.
so even in that example, it's like, even the advisor, right? The advisor in that space can pay lip service to academics. And then you look at the underlying funds and it's like, well, why are we in these things if they don't align with what you just said?
That's huge. That's next level. That goes with the analysis that you guys provide, the MRI.
Yep.
Yep.
The
Marie, that thing.
That thing.
That's where you go and you take a deep dive into what they actually have. And you start looking at like risk-reward ratios. And that's really, at the end of the day, it's all a risk-reward calculation, right? Which is tough to calculate. I mean, for most people are speculating on
Most
the
people
risk
only
versus
look at the
reward.
reward.
Yes, or just look at that.
Yeah.
Which is easy to do, especially now when the market's been up for a long time. It's really easy to do that, and we've seen, and also there's sort of there's a confidence that's building right now. It could be a false confidence. We don't know. We won't know for years probably, but we had the flash crash in February. Market recovered. We had a little flash crash, if you want to call it that, last week. Market almost immediately recovered. So, and that's building confidence in the market for people who are wanting to go risk on, which could be dangerous, especially if someone doesn't have a strategy behind what they're doing or why they're doing it. Is there any reason? Is there any rhyme?
Well, and the funny part is when we talk about the market, almost everybody's talking about the S&P 500. And, not a dig, but I was bored the other day, so I was making a ton of memes about the S&P 500. But it's just interesting how everybody
is a ton of
They're
memes.
really good.
Are they?
Yeah. It's just interesting how people get all excited about the S&P 500.
yeah.
And when you look throughout history, it's the lowest performing equity market in the United States by not a small margin.
Yeah.
Like if you invested in 1926, when essentially the markets were available,
Yeah.
all of the U.S. market spaces, a $10,000 investment in the S&P would have ended up with $86 million, gross of fees. A $10 million investment in small cap value would have ended up with $3 billion. I don't know, $3 billion, $86 million. What are we all excited about the S&P for?
Well, did you invest $10 million in the small cap or 10,000?
10,000.
Okay, so 10,000.
Yeah.
Well, what would that be? That would be almost the government budget if you put 10 million.
The government budget.
That question mark of a number.
So, and you're talking about small caps. You're talking about like the Russell or something,
Yeah.
or what do we call the top 2,000?
Just pick any market
Russell
besides the
2000.
S&P 500 for the U.S.
for the US.
Just pick anyone. Right.
The Dow. People like the Dow as
But-
well.
Well, in the Dow, you can't actually. I mean, that's the average, the index, right?
Right.
So, it's like it's a cool indicator, but I just can't really put money into it. Not effectively, but
Yeah.
no.
That's that. I guess that's another conversation, of ETF conversation.
You're right. Right.
Yeah.
Yeah.
That's another ETF
Down
conversation.
That was one of the memes I made. I'll act it out. It was Peter Parker and the editor from the
Oh, that was a
magazine,
good one.
and I had the editor say, "What do you invest in, Peter?" And I had him say, "S&P index fund," And the next slide was him just looking at him, and the next one was him, like, no dig at anybody that does that. It's just, again, from an, I am digging, but from an academic standpoint, it's like, well, if that holds true, if what I'm saying is true and you can verify it, why would you be so excited about and choose the S&P if there's other markets that have skyrocketed past that are available? Yeah,
100%, and it makes total sense. And I think what you're talking about now is, you know, specifically where to invest. But you guys have a very specific, hey, this is what we believe is the best risk reward opportunity for long-term investments.
Yep.
Which you have tons of academic research that support that. You know, this is what we think is best. And at any given moment, one thing might be better than another, but over long periods of time, which people should be investing for long periods of time. I highly recommend whatever you do, don't try to get in and out of the market.
If you're not investing for long periods of time, you might as well go to Vegas, because at least you get perk benefits when you lose your money. I'm the Gold Players Club. I lost 12 grand.
You won't feel the next loss.
At least you get free drinks.
Exactly.
So I think that's a good moral. Long-term investing, stock market. Short-term investing, sign up for a perks club at Vegas.
Yeah. No, and I think we're coming up on times that are going to be very interesting for that. You know, depending upon what happens here. I mean, the economy seems strong. Numbers and data keeps looking good. The Fed seems hell-bent on raising interest rates. So we'll see what happens there.
Oh, the Fed.
Unemployment numbers, though, look really good.
Bulldozer that.
Netflix beat.
Blockbuster.
Netflix wins. Amazon continues to grow. You look at some of the stocks that are the highest right now. You mentioned Google earlier.
No.
I remember that IPO like it was yesterday. But you know, you keep seeing positive signs. You just keep seeing things that point to probably higher prices. But you know, we never see the catalyst coming for the down movement. And I think when that happens, as you mentioned, when we had the big down day last week, you're getting calls. You know, what's going to happen when we actually see like a downward movement, like not just a bad day or two, but a bad couple weeks, or a bad even couple months.
Well, the nice part is with the Matson portfolio, since we're an international, because we're diversified, we've already seen that.
Okay, gotcha.
Oh yeah. I mean, I think that's worth mentioning. Like people watching this, it's like it's not all daisies and roses. It's markets have crashes, and there's lots of markets. So international markets, I mean, our emerging markets, small cap value is like down. That portion of the portfolio is down with 10%.
Something like that.
For the year.
Yeah. I mean, by comparison, the S&P, right? So that's where you talk about really having to be disciplined. You see that, and the average investor's like, well, why are we in that? Well, because last year was up 37.
That's why.
Like, what do you want? If I could tell you when it was going to do what, I wouldn't be doing it for you.
Yes, that would be very valuable information.
Right.
There'd be lots
or
of ways
you'd
to
have
make
to
money
pay
doing
a
that.
lot for that. Yeah.
That's interesting. I wasn't aware of what's going on internationally. I don't pay much attention to those markets.
I know. I know, Derrick. We have to have a conversation after this.
But so it's down. So I wouldn't know that. But that's part of the truly being diversified. Is what you're talking about here, being globally diversified.
Well, and one of the we have a webinar coming up for existing clients to give them some insight on that. But one of the things that we're going to look at is actual market spaces since like 1998, something like that. I mean, Finland, for example, over the last European markets and U.S. market, Finland as a country was on the top returning market for 4 years. The U.S. was only one in 2014. Finland's top return was like 160%.
And the U.S. was the bottom
Nobody's calling us
market
asking for
14
Finland.
times.
No one's asking for Finland.
No one's asking for Finland exposure.
Right.
Yeah.
Nobody's asking for it, but 160%. Like, why are we freaking out about S&P being up 8?
So you have Finland exposure, obviously, in your international.
We got 45 different countries. You know what I'm saying? Like, if I was one of those, I was gonna say, you want a little? I got a little Austria. Want some Austria? Austria, by the way, was up 72%. Was in 2003.
I didn't even know there was a market in Austria.
Yeah.
There's a stock
There's not
market.
an index for it.
There's no index. but there are securities.
Yep.
Yeah.
That's interesting. This is interesting information. People don't know this. People don't realize this.
Well, that's the biggest problem with indexes is it's really hard to get that level of diversification in international. Because it's really difficult to get a fund, an index fund that's going to track that in the U.S. Like, it's not easy. And even if it was, there's going to be a lot of disparity. Because especially in a small cap value, companies move in and out. So if you get an index, the index has got to keep keeping track of that.
It's also expensive for companies to create an index or a fund like that. It's not something that's as easy as just doing an S&P index, right?
Well, and listen, if somebody was asking if we had enough people asking for a Finland index, there'd be an index.
Yeah.
But it's all about what sells. You're not. It doesn't matter if it's academic. Nobody's going. If someone was going to, I don't know, a big company and was like, I have $1 billion with you. I demand a Finland index. They would do a cost-benefit analysis. But it's just that people don't know to ask for that. All they know is what is talked about, which is
what's sexy,
S&P,
what's on TV.
the market. There's tons of markets. How do we say
But
the market? It's one.
Yeah.
Well, the global market. You
Yeah.
could say. Right, that's what you want to be invested in, right?
Right. Well, even in the U.S., that's what we were talking about. S&P 500. There's large growth companies. There's mid cap. There's small growth companies. There's small value companies. There's micro cap. I mean, you get.
Well, let me ask you a question on that front.
Don't do it.
I have to.
I'm sorry.
I do now.
It's already done.
I have to do it. What would you say to people who say, well, the Dow Jones or the S&P or whatever is comprised of companies that do business all over the world?
Bye, Felicia.
And and so therefore you do have some international. For example, if you own McDonald's or something like that, McDonald's is everywhere, which is weird. Actually, I just spent a week in Switzerland. McDonald's and Starbucks are like paired up there. So like wherever there's a McDonald's, there's a Starbucks. They're right next
cool.
to each other.
Interesting.
Which I found strange.
Coffee and dysentery.
Because McDonald's
Yeah,
sells
McDonald's sells coffee.
coffee. What?
Wait, what did we? Oh God, what did
Cut
we
it.
miss?
Live from San Diego.
Dysentery.
From San Diego.
Amazing.
Ba-da-ba-ba-ba, give fat and die. Unless you buy a salad.
That's Don't even get me into the
You
price
need the
of the
coffee
salad
to
versus
flush.
the burgers.
right?
Like, don't even get me started on that.
Listen, I have no room to talk about fat. These used to be not tight jeans. So,
But you have dysentery. That's the question.
no, but that seems like a weight loss strategy.
Coffee and dysentery.
Okay.
Sorry, bring it back.
So what would you say? What would you say to that hypothesis, if
God.
you will?
That's true.
That's funny.
I mean, it is true that larger companies, especially ones that are internationally based or are based in the U.S. but have international reach, are going to have impact. But like if I said, what's better, 17,000 stocks in 45 countries, or 500 stocks based in the U.S.? I mean, what does reason tell you?
As far as diversification is concerned. Yeah.
Or as far as which would have a greater true level of well, I guess diversification, but like the broad impact of that. If there's 17,000 stocks that are individually held in 45 countries versus I could have one index that's 500 companies, that might have an impact on international markets. Might. What would you choose? Presented option like that.
Gotcha. Okay. Makes sense.
I was asking you a question.
You're asking me the question?
Yeah, what would you choose?
17,000 stocks?
There you go.
Well, we have to go through them one by one.
Good luck with that.
Half the right answer.
We got to go through them one by one. I want to see the MRI on everything. I want to know ratios and. But you've already done that work.
Bust out the calculator.
So it should be
and
quick.
Figure out how much it's going to cost him. Yeah, that's a cool thing about the MRI tool is it's updated yearly to reflect all of that information as far as new funds that come in, new funds that go out, or funds that go out. Luckily, we don't have to. It's something that we've subscribed to. We didn't create it because if we created it, they showed us the budget on that. It's like $250,000 a quarter to maintain it.
Wow.
So we benefit of the fruits of the labor, which, thank you.
Thank you guys for doing that work.
Yeah.
And your clients get to benefit from that as well.
Mm-hmm.
That's the point, right?
Yep.
Is you're passing the knowledge along, teaching people how to do this the right way, how to think about it the right way. And that diversification conversation is one that we've had before. We're talking about really truly being diversified. What does that look like? What does it sound like? In your academic research, you believe it's 17,000 stocks in 45 countries. That's what being diverse really looks like, not 500 stocks in one country.
Right.
Is that right?
Or one market in one country.
One market in one country.
Yeah.
This would be a whole. This would be a great sub. You know, this
Sub-segment.
This is another segment
Yeah.
for sure. But I think that it makes sense.
Yeah.
I think if anyone hears that, they're going to say that makes sense. You know, and you have the data to back it up.
Right.
Yep.
Now, global markets. Typically, the U.S. has been like the leading indicator, right, for markets for quite some time.
I mean, it's our leading indicator.
It's been
Yes.
it's definitely been a leading indicator.
Yeah.
So it's interesting that some of the international markets have been down. You know, I'm going to look into that more.
Yeah.
Very interested.
It may have a factor in relation to tariffs and the discussion of trade wars. I mean, that's speculative, but
Yeah.
there's a lot of things that affect markets. It does seem as though that would have or could have an impact. But given that we don't speculate, it's more of a observation of a possibility.
Mhm.
Yeah.
It doesn't really matter,
Yeah.
is what you're saying. It doesn't matter why. The why doesn't matter.
Well, and people that we have one presentation we're eventually going to do called an OMG Armageddon, and it really looks at. I mean, people. A conversation I had with someone else last night was, do you think that with the tariffs and with the current administration, like I get that we're an international, I understand the diversification, but I mean, what if the current administration gets reelected in 2020? Then is it going to be down for 6 years? And I go, I don't know. But I do know that the international markets have survived a lot worse than some tariffs. And they're still here, and they've still performed amazingly when you look at the totality of them. So, how can you can't make a short-term decision based on long-term academic play. You just can't do it. You can try, it won't work.
Yep.
And if it does, it's like a crapshoot.
Yeah.
Yep.
Getting lucky.
At which point, play your perks.
Get your free drinks.
Exactly.
This is great stuff, guys. I really appreciate everything. Corryne, I just wanted to come back to you for kind of like, I don't know, one last thing, one last question for you here.
Okay.
And there may be a loaded question.
Okay.
But
dice.
you've seen both now, and you've exited the industry, right? So
Yes.
so you're out. So we can say now that you don't have any skin in the game here.
No.
You've experienced what it's like to work as an investment advisor for a big box brokerage. Very big name, publicly traded organization, a name that everyone listening to this would know.
Oh, yes.
Okay. You've also, I'm assuming, had the opportunity, you can confirm for me, to hear what Thomasson China are doing and to understand what they're doing. Yes?
Yes.
Do you, in your opinion, do you feel that overall people would be well served to investigate, maybe people who are invested with some of these big box brokerages, to investigate what it is that Thomasson China are teaching?
100%. Definitely.
Tell me why.
Because we paid her to say that.
Yes.
The jig's up, segment's over.
Disclaimer, just kidding, we didn't.
No.
No, seriously though.
Yes, I definitely think so, because what these guys are doing is they're empowering people to take control of their money. And it's different. It's a different feeling. You're choosing how you want your money, how you want to have a mindset around your money. You're learning new habits. You're really having a choice in the matter, learning what they're teaching. Whereas at the previous firm, it was just, you kind of were just along for the ride. You just did what the advisor said. Sounded good. Okay.
Hope it
Sounds
worked.
good. Fingers crossed the market will stay up. Fingers crossed.
Fingers crossed.
And
That should be your guys' new logo. Like fingers crossed with a big X like, through it. Like, this is not good. This is not a good strategy, especially with the scope
Write that
of
down.
what's at stake, right? Like, I mean, what's at stake here is so much. It's your life savings.
It's your peace of mind.
Yeah.
If you don't have peace of mind where your finances are concerned, we have to make a decision every single day about money, then how is that going to affect the rest of your life? You are going to be all out of sorts.
Health, wellness, there's
everything.
Right.
It's all connected.
Everything.
And this would be a perfect time to wrap up the segment, but I have one more question that's sort of, it's out there.
I'm ready.
It's out there a little bit.
So am I.
It's speculative in nature, and we could easily cut it from the final video if we need to, but I'm just curious what you guys think about, rising interest rates and the impact that that might have. We've been in a low interest rate environment for such a long period of time. And we've seen that the Fed is hell-bent on unwinding mortgage-backed securities, raising interest rates, trying to get them back to a normal level. We haven't been at a normal level in a long time. We don't want to be Japan. They've made it very clear, like, we don't want to be in this situation where we just have to be at 0.5% forever. What are your thoughts on rising interest rates, the impact that might have, and what that might do to investors' thoughts or options?
Well, it sucks trying to get a mortgage with it, just by comparison to what was,
No question there.
Yeah.
It'll hurt real estate values, I believe, Matt, for sure.
It's not going to change what we're teaching or how we invest.
It won't change anything.
No. Well, I mean, and to kind of, you're baiting with that question, I know it. But to kind of give an answer, and I don't want to butcher it, but one of the academics that we see as a huge power play in the investment strategies we use is Eugene Fama. Eugene Fama came up with something, and Kenneth French, they came up with something called the 3-factor model. And it goes into the portfolio designs. But there was a segment there was an interview with him that was actually talking about that. It asked about the impact of the Fed and the interest rates and whatnot. And he went on to point out, he goes, well, you have to really get clear on what impact does the Fed truly have? Like, is there a huge impact? And the end result was that it was marginal. And the reason he arrived at that was he said, well, look at lending across the board. And this was in like 2009 or 10 or something like that. He goes, look at lending across the board, depending on countries. It's all relatively operating the same. The way interest rates are, the exchange rates, things that are occurring globally. And he goes, but each reserve of the country, each bank of the country is doing different things. We were doing quantitative easing, other countries were doing different activities, but yet markets were stabilized and similar. And so, as I said, I might be butchering it, but the idea was that it really doesn't have as much of an impact as we think it does. It's more so we attribute what occurs to the Fed incorrectly versus it just being market shifting. So interest rates of market shifting in general. And that was a huge, because I had always wondered that too, and walking through that and seeing a Nobel Prize winning academic research, a professor go over this and talk about how little of an impact the Fed really has based on the markets, the global markets.
Yeah, the perception is that it's huge.
Right, the perception is it's huge. And
on Fed days, the markets stop. Like if you watch a ticker of the futures market on a Fed release day, a note release day, stops, trading halts.
Yeah. But that's not based on academics or actual impact.
No.
It's based on the perception of what that impact will be.
That's right.
And where do we get that perception from? Well, I mean, again, people need to hype crap up. If we were to say, life's good, markets are going to do what the markets are going to do, invest long term, don't get greedy, don't get crazy, it doesn't sell.
So boring.
It's boring.
Well, you don't see Shrek on the cover of Vanity Fair,
Versus you get on.
Come on.
You turn on, Fox and Friends or whatever you want to watch, and get Neil Cavuto talking about all of this stuff and getting people on there like, oh my God, the Fed's raising the interest rate. We're all gonna die.
All of a sudden, Kermit the Frog is on the news.
Well, it's like my Davowitz impression. Oh my God, Maria.
It's never,
coming back. Oh my God.
Oh boy. Cut it. Cut it.
But I think one last thing that's really important to mention, and it really goes in the fact of why we think health and wellness are so connected, and the fact that you're undertaking the wellness side of it now because of that being your passion. I think this is a hugely important point to make, and why, like, people might watch this and go, well, why do I need to learn that? Like, that's why I hire you for. Why do I need to learn this stuff? It's because with finance, unlike diets, for example, or wellness, you don't get a second chance. Like, if I'm eating healthy and I'm physically fit and I'm doing good and I see a piece of cheesecake and I break down and I eat it, I don't immediately have a heart attack. Maybe. Like, that doesn't happen with diet and wellness and health. That's a slow, progressive deterioration. With finances, a 2008 happens and I'm undisciplined and I sell out of the market and I don't get back in, instantly, life-altering occurrence.
Yeah.
That's why that level of discipline is so important. That's why the taking of the time for people to learn it instead of just hoping that their person has it figured out for them is so important. And we had someone tell us, like, I liked working with my guy because it was simple. Like, I just went in, he told me what to do, told me what to set up, and I just set it up. And, it's a lot easier than what you guys are talking about. And we looked at him and we said, cool, how much money do you need to have before you care about what's happening to it?
That's a good question.
Like, is it 10,000? Is it 100,000? Is it $1 million? And if you cared about it sooner, how much quicker could you reach that?
What if your guy dies? Like, I don't want to be morbid here, but you have your guy that you like.
Which the way I'm eating might happen. Just straight up.
Corryne will help you out.
I got you.
So,
Thank you.
But seriously, and this is in the world of marketing. I always say this to people who it's like, well, okay, when you, like, people buy leads, for example, instead of generating their own.
Yeah.
If you generate your own, you build your own model to generate leads, then you now own that, and, like, you can do that forever. You can tweak it. Yep. If you buy leads from a lead provider, I guess you're just hoping that they're going to continue to create leads and do a good job of it. Or what if their leads start to suck? Then what are you going to do? Or what if they go out of business? Or what if someone else starts paying more money for it? If you figure out how to do it on your own, which is what you're teaching people, then you have that and you own it, and it doesn't matter what else happens around you. That person who has the guy that they like, what if that guy retires? What if he moves? What if he starts being wrong?
Right.
What if it starts not working? If you don't have confidence in the overall strategy of what you're doing, if you don't actually know how to evaluate what's going on, then you really don't have a prayer long term.
There's no power there.
Yeah,
Well,
there is no power.
No power.
And in that space, what you really want, it doesn't so much matter if someone sells a product on the back end or what. I mean, we talked about all the negatives of commissions, but I'm really convinced, and the conversations we've had, is that if someone's, I mean, biasly, if you're not going to work with us, good luck. But no, if someone's going to work with an advisor, one of the criteria really should be an upfront payment for the advice. Because what we used to do, and what the model of a lot of firms is, that you give advice for free with the expectation that products or services that have to be put in place are put in place with you. So think about what kind of conflict that's going to cause. If I meet someone and I get all their information and I'm taking a ton of my time and I haven't been compensated, and I actually determine that they don't need a product or service that I bring, I either do the right thing and have wasted all that time, or I'd either have to fabricate a reason, which is why there's so many laws and insurance policies and things like that against replacements, and so many notifications for clients about replacing insurance policies, because it's exactly what was happening and still does, but it was rampant before. It was someone meets with someone for free, gets a different perspective on an insurance policy, and that person goes, oh, this is trash, that's horrible, blah, blah, blah. You got to buy what I got. Buy what they got, commission.
Yep.
Versus, hey, what you got's good. It's going to work for you. I just gave you a bunch of free advice, which sucks for me, but it's going to work for you. That's why an upfront payment for an advisor makes so much sense, because at least then they've been compensated for the advice, and there's less likelihood for them to tell you that something's wrong just to get a commission.
Compensation drives behavior. Control the compensation, control the behavior. That is a spike on this segment right there.
Day in his coffin.
You guys crushed it today, as always. Corryne, thank you for coming in today.
Yeah, thank you for having me.
And sharing your story. I mean, I think it's important for people to hear different angles on sort of how this stuff works and the truth behind what goes on, and to hear you say, hey, I've been there with the big box brokerages. You should really take a closer look at what these guys are doing. It is the way of the future, hopefully.
Is PayPal fine?
Works perfect.
Share this video. Make your friends
that part.
smarter than everyone else. We can't cut it on the live video. We'll cut it for YouTube. See you next time.